Trading Group at the Chicago Board of Trade building, downtown Chicago. We are just right on the apron of the grain pits. In fact, we have the corn pit right behind us as we have a chance to talk now with Tim Andriesen, Managing Director, Agricultural Products for the CME Group. Tim, good to see you again. We were talking before going on the air that it's different than the old days, and it's been several years since I've been here. It was a lot louder back then. It seemed more chaotic to those on the outside. But if you look at the pit here behind us, there are a lot of people still here. It's done differently. It's a different dynamic now.
It is. I mean, right behind us is the options pit, and we still do a very significant amount of the options business in the pits. In particular, with the new products that we've launched, we found the pits are a phenomenal incubator for new products. Guys are really keen to take on new things and to build them up. Futures, on the other hand, we've seen a much more of a shift of futures into the electronic markets than we have on the options.
Mm-hmm. So it's quieter, but still a lot going on behind us.
There's still a lot going on. I mean, if you look at volumes that have occurred year over year, we've seen pretty consistent growth in the market. This year things are off just a little bit, but that has a lot to do with the fact that prices are down and maybe there's a little less volatility.
I was talking to you about this too. I was kind of wondering, this is crop report week. We'll have supply-demand numbers out tomorrow. Still, I think everyone's still kind of adjusting to the new release time for those reports. What's been the reaction here at the CME Group?
Well, one of the reasons that the reports are being released at the time that they are is that people are still getting used to the idea of a report being released when the market's open. In the middle of the morning is a time when there's a lot of liquidity here. So, our view very strongly is that if you want to see a report released, you want liquidity there so that as people come out, they have their initial views on the report, the market moves, there's liquidity there to dampen it and to make sure that people can execute the orders they want to.
Mm-hmm. So it's kind of an adjustment period. People still getting used to it.
It's an adjustment period.
Yeah. Well, there are a lot of changes going on. Acquisitions, integration, the Kansas City Board of Trade, the integration process there that, you're coming up on July 1st before very long. Kind of tell us how that's going.
Well, it's going to be a pretty amazing thing because what you're going to see is in the pits behind us on the other side of the corn pit is you're going to see Kansas City wheat and options on Kansas City wheat trade in an open outcry environment right next to options and futures on Chicago wheat, which is one of those things that I think 20 years ago, if somebody was said, do you think these two things are going to be trading right next to each other, you wouldn't expect it. But it is going to happen. We think that's going to be phenomenal. I think there's a lot of synergies there. I mean, historically, people have always traded Chicago wheat and Kansas City wheat as the protein spread, and we think that having them in the same place, having them on the same platform, it's going to do nothing but facilitate more products and more opportunities for the customer.
And speaking of new products, you have 3 new options too?
Yeah, so, and I didn't mention Minneapolis wheat, but so if you think of the 3 major wheat contracts, there's a lot of spreading going back and forth between those. We're now at a place, thanks to the Kansas City acquisition and thanks to, the great relationship we have with the folks at Minneapolis, is options on all of those spreads. So not only can you trade the spread itself as a futures to futures, you can now trade an option on the spread. So we think that's a really good thing.
We're talking with Tim Andriesen, Managing Director of Agricultural Products at CME Group, and we are here on the floor. Right behind us is the corn pit. As we look at the changes that are going on here. Newer grain options, and I know you've seen some growth in the short-dated new crop options products, and you're excited about that as well.
Oh, yeah. Look, we think these are a fantastic product, in particular for the producer. In my past history, I spent some time as a marketing advisor working with producers, and everybody loves the concept of an option. Look, I want some level of protection. I want a limited price exposure. I don't want to have to make margin calls. Fantastic concept. Then you get to the price. And price is always challenging. And when volatility is up and when prices are up, it makes using options that much more difficult because prices are up. What short-dated new crop options do is they allow the producer to still manages risk using options, but at a lower cost, because what he's basically doing is buying smaller bites at time. And so he can buy an option that's going to be at a lower premium that will get him through planting, might get him through the initial part of the growing season, might get him through pollination. And as he goes along, he may say, well, I don't need any more protection. I'm not going to buy another option. Or he may say, look, I'm still not sure how it's going to all play out, so let's buy the next one here.
So new products, and there has to be kind of an education for everyone to understand what's available and how it can work for them.
Absolutely, and it's amazing. These are probably the most successful new product in ags we've launched in quite some time. Open interest between corn and beans is about 200 and I'd guess it's about 220,000 right now. We're trading good volume in both of the products. Friday, interestingly, was the first day we traded more bean short-dated new crop options than corn. But still, we go out to various meetings with farmers and with other groups, and we talk about them. They say, I kind of heard about it, but I don't really know what it is. So there's still a lot of education, a lot of opportunity for uptake there.
You've announced you're raising individual grain order size from 1,000 to 1,999 contracts.
Mm-hmm.
There's been some concerns raised, maybe some speculation that could lead to increased volatility. Do you think that'll happen?
No, I mean we did the analysis, and the amount of the amount of impact we think that's going to have on the market isn't significant. There are times when people are trying to execute larger orders and they've been constrained, and we think that just facilitates giving them that opportunity.
So you don't, everyone's concerned about volatility, but you don't think that will contribute to it?
The key thing to keep in mind is what drives volatility are the events in the market. I mean, if you're having a drought or you have some other fundamental factor, that's what's going to drive volatility. The market is only going to reflect the volatility that's coming from those supply and demand driving events.
Like a delayed planting season.
Which
we're dealing with now. Tim, you've just outlined a number of changes that either have happened or are going to happen. Do you anticipate more?
Well, our goal is to look at opportunities to provide better products and better service to the industry. Short-dated new crop options were very much something that came from what we perceived as a need in the customer that was communicated to us, and where we sat down and tried to come up with a solution. We're always looking for that. We're always looking for what product does a better job of meeting the needs of the customer. So to that extent, I think you're going to continue to see us to look to innovate. In terms of just pure game changers that are on the horizon, I don't see any fundamentally different things. I think it's more incremental improvement than anything else.
And technology plays such a key part in what you do here and how people find out about what you do here.
Yeah, it's an amazing thing. People don't realize that CME is a technology company. A very substantial amount of the people that work here are technology people, developers. We have a significant budget where we invest in the market, in the infrastructure in the market, in the technology, developing greater and stronger safeguards for customers, providing more support for customers. There's a lot of those things on the technology side that we invest very heavily in.
Another thing we didn't talk about is trying to find the right trading hours, the changes that have gone on there. I mean, do you feel comfortable where you are now?
Well, we think that what we have are hours that do a pretty good job of meeting the needs of a global customer base. We have a very substantial European customer base. They're very appreciative of having a 1:15 close because it gives them a bit more of an evening. They're appreciative of having the morning break, though it's only 45 minutes compared to what it used to be. I think a lot of our customers here like the idea of having the afternoon where they don't have to think about the markets. They can get home, they can get dinner, and then get back onto the markets if they're a global trader. Our goal is to meet the needs, to find the balance between liquidity and access. And at least at this point, we think we're there. As the world changes and as markets change, we may end up having to do something different, but we don't see that as something that's right around the corner.
Tim, thank you. Appreciate the time, the hospitality here. We look forward to talking with some of the traders and get their perspectives on some of these new changes that are going on, and of course the events that are going on with this delayed planting spring that we're dealing with. Thank you very much. Appreciate it.
Thank you, and glad you could join us.
Thanks a lot. That's Tim Andriesen.